Pudgy Penguins is the largest meme coin on the Solana chain. We did see the growth halt somewhat in the last few months, but now we're coming back. This week, Pengu appreciate again. The question is why? Who's buying here? Who's selling here? Let's have a look at the on-chain data, the data most people are not considering. So we're currently at 3.4 cents roughly. We appreciated by 11% this week, and we topped in the price 1.5 months ago. Now, unfortunately, this recent rally did not bring us beyond the trading range. We are still in a downward trend. But maybe there's more than just 33% upside potential. Now, Pengu is already the largest meme coin on the Solana chain with 2.1 billion. And we've covered the token several times on this channel. I've also actively traded the token with profit. More on that in a second. But let's first compare different meme coins because it looks like there's a lot of correlation. They all go up at the same time. Let's compare Pudgy Penguins with the Trump token. That's this chart over here, Pengu relative to Trump. A very similar setup as in we see lower highs over time. Let's compare Pengu with Bonk. Here the trend isn't that clear. It seems like the assets move more in tandem with each other. And there is actually a good explanation for that because the tokenomics and the overall setup between Pudgy Penguins and Bonk is very similar. Here is the tokenomics of Pudgy Penguins over time. Right now, the token supply is not expanding, but we don't know whether or not they had already been over-the-counter trades, where market makers got an allocation for Pudgy Penguins for a price discount and potentially then hedge themselves via the perpetual futures. Here's the tokenomics of Bonk, and again, it's the insiders, it's the early contributors that get more and more allocation over time and potentially dump on the token. Have a look at Bonk relative to Solana over time. This underperformed by 68%. And it is somewhat in a trading range. And I also traded Bonk actively. So I shorted over here and closed the short over here. Here's the proof. This is a post on July 18th. I'm opening a short in Bonk relative to Solana. And here is a follow-up on August 28th where I'm closing the short. And so while some people might say that technical analysis is just random lines on a chart, I do think if the tops align relatively well and the bottoms align relatively well, this is a good representation of the overall market psychology. If enough people think that an asset currently is comparatively cheap or comparatively expensive, then this does become a self-fulfilling prophecy more often than not. Just have a look at how those tops align. We've got 1, 2, 3, 4, 5 tops, and the 1, 2, 3, 4, 5 bottoms also align pretty well. So there is still the risk for Bonk to potentially go down another 30%, but I think the risk to reward isn't really worth it to short Bonk further. But this video is not about Bonk. This video is about Pudgy Penguins, which interestingly enough has very similar tokenomics to Bonk. That's why we quickly talked about it. But yeah, I also opened a short on Pudgy Penguins, and that was on the 7th of August. But now I do not have any stake in Pengu anymore, because have a look at this, there is a breakout. On the US dollar chart, we do not see any breakout, and this chart might suggest that Pengu will further fall from here. But the relative valuation chart to Solana does not look that great for a short. It seems like we have broken out of the bearish trend. This here, by the way, is where I entered my short. And because of that, there is a good chance for a turnaround. I'm personally not betting on that, but it wouldn't be surprising to see Pengu suddenly outperform Solana by more than 50%. It would be within the historical volatility. Now, Pengu is mainly traded on the centralized exchanges and on the perpetual futures. We do have on-chain metrics though as well. So here are the trending tokens on the Solana chain. We've got 600k worth of liquidity on the chain. It's now the 25th largest trending token. In the last 24 hours, we saw 2,659 wallets interacting with the token. There are much more sellers than buyers, so the price is going down. No surprise here. And in total, we've got more than 500,000 holders on the Solana chain. Now over here, we see the number of retail investors versus whale investors. The way we make this distinction is by looking at how many Pengu tokens are held in a particular wallet. So on the left, that's 30,000 tokens. That's equal to $1,000. For the chart in the middle, we go at 10x, so that's $10,000. For the chart on the right, it's $100,000. No wallet cohort is currently accumulating Pengu, or at least the number of investors is not going up. It tends to go down quite consistently. But again, that's only for small retail, medium-sized retail, and those whales with $100,000. Now let's continue the quest. Again, we've got $100,000 here on the left, but now here in the middle, we've got $1 million worth of Pengu. Now this is interestingly enough going up. So the mega whales, they are increasing in numbers. On the right, we've got potentially the centralized exchanges. There's at least 10 million worth of Pengu. But really, the focus should be on this chart. The deepest of the pockets are going against the general trend, which again would suggest that Pengu could potentially outperform Solana. In the last 24 hours, we didn't see that much spot trading volume, so only 86 million on Binance. We saw much more on the perpetual futures. Here we had 268 million worth of trading volume. The perpetual futures market was also where I was betting on Pudgy penguins. I used Hyperliquid. But again, I currently do not have any position in the token. I'm currently neither long nor short. In general, the perpetual futures traders tend to be rather bearish on the token very often. As in, here we've got the funding rate of Pengu over time, and when this is negative, it means that the shorts are willing to pay money to bet on falling prices. The shorts are paying the longs over here. This does not happen too often with fundamentally solid projects. Currently, we do have a positive funding rate, which should be the general balance of the market. But just have a look at the funding rate here for Bitcoin, right? It's positive the vast majority of times. This is not true for Pudgy penguins. Here's the amount of bets on the price, so the open interest on the perpetual futures, and there is some correlation with the spot price, as in when there's less bets on the price, spot tends to go down as well. And currently, the open interest tends to rather decline. But again, we are currently at 360 million, and we could potentially double again. So the short-term capital could get back into Pudgy penguins again. The trading volume would definitely suggest another rally because it's currently comparatively low. And again, there's positive correlation between trading volume and the price. When there's more attention on the token, the price goes up, the trading volume goes up. When there's less attention, the price goes down, and we are comparatively low with trading volume. There's much more upside from here. The market is currently at a balance. There's not too many liquidations. When I got my short exited over here after the price went down by 31%, that was actually a forced liquidation because of a trailing stop loss. So I just adjusted my stop loss further and further. And then once we broke out, a liquidation appeared, and that liquidation was actually the majority that happened on that day. So there was 1.7 million worth of liquidations, and my position was worth roughly 1 million at the time. Did the market makers manipulate the price to the upside in order to liquidate that big position, or was this just purchases because in general Pudgy penguin tended to be short-term oversold? I don't know. Right now I stayed out of the token. I already made a profitable trade with it, and I'm just waiting for the market to get into a more extreme position again. So maybe we see an all-time high in the market cap, or maybe we sell off very quickly. If we see ourselves in an extreme situation, I think it's much easier to take position. Now here's the problem with investing in this market. There's in general two major forces that impact the prices. On the one hand, we've got the macro environment. Where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now the problem is most people can't make constant gains because most people aren't really segregating among those two influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest, if Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is Balancer relative to the others market cap. So how is the Balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the Balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of Balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to Balancer. So we bet on rising prices of Bitcoin and on falling prices of Balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like Balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the balancer token trade. It's going long Bitcoin, Ethereum or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I'll refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me, because I will not just share this one trade. I will, of course, share every trade that I do myself as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.